be leading the webinar again this week. So we're going to be talking about QuickBooks Online and focused on accounts receivable a little bit, some of the things around accounts receivable. Of course, I always like to talk about what makes Fourlane unique. This week, I'm going to focus on the strategic partner for change management. So change is very hard for people. And the way that we have set things up to manage change, so like as an example, moving from QuickBooks Desktop to QuickBooks Online, is we have set a process up that we put all of our clients through. That doesn't mean that we don't kind of pivot here and there, but we set processes up so that because we have learned from the hundreds, if not thousands, of in-product conversions that we've done already. And we can help make that journey smoother, because any kind of change for anyone is difficult. When you're moving from one system to another system, if it doesn't look right, that's difficult. So we like to help focus on making change and making it, I mean, really what it is we want to make sure that we're upfront about what can go wrong and what you're about to go through. So one of those things that makes Fourlane unique. Accounts receivable is what we're going to be talking about today. So when to use accounts receivable, what is it? Transactions meant for accounts receivable, other transactions that can use accounts receivable though, because awareness is key when we are troubleshooting anything with QuickBooks Online, and then applying accounts receivable offsets. So let me go ahead and dive in product here. I'm going to do this in our sample file. Now this morning in the sample file, it kind of acted a little bit strange. I ran through this a couple days ago and then I ran through it this morning. So hopefully we'll be able to see it function the way that I expect. If not, I will flip over to my demo QuickBooks Online Advanced account. I just don't like to use it because it doesn't have as much data as the sample file has. All right, accounts receivable. So what is it? So accounts receivable is an account on the chart of accounts, right? And sometimes people have multiple accounts. It is in the asset section, or should be, hopefully, in the asset section of your chart of accounts. And it is a very special account in QuickBooks because when you do a target or a line inside of your QuickBooks file, and it's going to hit chart of accounts, hit accounts receivable, it has to also associate that line with a customer. That is a requirement. Okay. So let me go into my chart of accounts real quick. So what I'm saying there again, anything that is an account type of accounts receivable, any line that is going to hit accounts receivable has to be associated with the customer. Now, the reason for that is accounts receivable type of accounts flow through to reports like AR aging summary. And we, in some other systems besides QuickBooks, you can post to accounts receivable without having a customer associated with it. But then when I go to collect that money, I have to figure out who owes it to me. Okay. Now, there are times when we have people who owe us money that maybe we don't want to run through accounts receivable, maybe like short-term notes or something like that. We might run it as an other current asset. The other thing that accounts receivable does for us is when we are creating an invoice, right? That's the main transaction when it comes to accounts receivable is an invoice. When we create an invoice, we are talking about terms. So I want to have this invoice in the system, but my customer is not necessarily going to pay me on the same date at the same time as me creating this invoice. Let me pull up a recent invoice in here. So when I create this invoice on 4/7/2023, I'm utilizing QuickBooks to tell me that this is something that is outstanding. Okay, so it shows up on my area aging report. Doing it on invoice allows us to create an invoice date, use terms, and say that something is due in the future. Okay. But if we are not going to accept payment at the time of creating an invoice, or before we create, if it's not happening on the same day at the same time, then you want it to hit accounts receivable. Accounts receivable is basically a reminder place. This is what you need to go collect. So we've had historically some customers who come to us and they go, oh, we import all of our web orders as invoices, and then we receive the payment immediately after. So we have a transaction invoice that hits accounts receivable. The due date is 407. And in fact, they already paid us at the time we're creating the invoice. So having that happen, you don't need to put that in and have that flow through accounts receivable, because you don't need a reminder to go and collect these funds, right? So we would use a different transaction type that doesn't flow through accounts receivable, called a sales receipt. So in an invoice situation, we debit accounts receivable, we credit most likely income. In a sales receipt situation, I'm sorry, let me finish that. Debit accounts receivable, credit income. When we receive payment, we credit accounts receivable and debit cash or undeposited funds. In a sales receipt situation, you are not running through accounts receivable. So you are debiting cash, crediting income. So you take out that accounts receivable middleman. Okay. So we use accounts receivable, we use an invoice, and some of these other ones, which we're going to talk about here in a second. We use an invoice when we are going to need a reminder to come back around and collect these funds. Hopefully, if there are any questions about that, definitely put your questions in chat there, and I will come back around to them, but not seeing any right now. All right. Now, let's talk about the transactions that are meant for accounts receivable. So when we come in here and we look at under our customers, because that is where we tell us, accounts receivable is around customers. You have to have a customer on the line if it hits accounts receivable. Transactions that are meant for accounts receivable, invoices, first and foremost. We already talked about that. Receive payment does hit accounts receivable, right? Because the invoice makes accounts receivable go up. Receive payment makes accounts receivable go down. And these things you can see if I open up my receive payment and I do a recent. Right? You can see if you open up a receive payment and go to more and our transaction journal, we can see undeposited, well, it was showing me, and then you can see undeposited funds is debited, which we talked about just a minute ago, and accounts receivable is credited, right? So the invoice made accounts receivable go up. The receive payment makes accounts receivable go down. So receive payments are meant for handling accounts receivable. An estimate does not have anything to do with accounts receivable, right? It is a non-posting transaction. It will not affect your financials at all. A credit memo. Take a look at a credit memo. So what is a credit memo? It is a opposite of an invoice, right? So we're invoicing a customer. We're saying, hey, customer, you owe me some money. A credit memo is the opposite. Whoops, we charged you for this customer and it was an error, or we're not going to do the work for you. We are going to credit it back to you. And so a credit memo, if I look behind the scenes at the transaction journal, is going to relieve accounts receivable, similar to how a payment does, right? It's a credit to accounts receivable. So that is definitely a transaction that is meant to be used with accounts receivable. A sales receipt is not meant to hit accounts receivable. This is the one that I was telling you about just a minute ago, that it will go straight to undeposited funds or to cash. So if I look behind the scenes on this transaction, I'm going to see, man, it just like that little circle. undeposited funds and landscaping services, right? Whereas if this were an invoice, it would be hitting accounts receivable and landscaping services. So bypasses accounts receivable. So we do not use accounts receivable on sales receipts. Refund receipt. So if we come in here and look at our refund receipts, you can see what is happening with this. It has the customer up top here. It has what products and services happening. If we go down to our transaction journal, right, it's kind of like the reverse of a sales receipt. It's hitting our checking account. We're paying out the refund. So it bypasses accounts receivable. Delayed credit and delayed charges are not posted until we turn them into an invoice, so those would not be hitting. So you can see in here the transactions that are meant for accounts receivable. Invoice, received payment, credit memo, meant for accounts receivable. Now let's get into the fun stuff. What you are allowed to do, because QuickBooks lets you, and it will happen. Someday you're going to have either someone on your staff or, you know, a customer of yours. If you are one of our partners, you will have somebody do this and you'll go, why did you do this? And they'll have a logical explanation, probably, hopefully. But it's good to know that it's allowed. So let's jump on over to here to non-customer related transactions. So I'm going to go into a check. So an expense, a check, a bill, right? All pretty similar, but I'm going to go into check. So I can come in. I don't have to choose a payee when it comes to check. I can come down here to category and I can post it to accounts receivable. So where I have seen something like this is I have seen someone say, well, I had to issue a check to my customer. So I wrote a check and I put it against accounts receivable to my customer. I'm going to create a new customer, by the way, Fourlane, so you can see. Makes logical sense. Now, if I tried to save this line without a customer, it would give me a warning. So I meant to do that first. Let me show you what it looks like. If I try to save this, it's going to tell me something's not right. If you use accounts receivable, you must put a customer on that line. Okay, so now I can save and close that transaction. So you can go in, right, and put in a check. Let me look at my check history here. And if I look at my transaction journal, it will allow me to put in a check which credits the checking account and debits accounts receivable. Okay. And as, just so that you guys can see the follow-up, because everything, right, anything we do inside of QuickBooks should affect some kind of report. So I'm going to look at the AR aging summary report. If I come in here and look at Fourlane, my new customer, I now have $150 on my AR aging summary report. Other transactions that you can put in that are related to accounts receivable. So you can do it on expense, you can do it on a bill, you can do it on a vendor credit, on a credit card. All of these are very similar to what we just looked at on a check, so that's why I'm not going to go through them all. Well, I'll go through this one. So choose a payee, I come down here to a category, can put in accounts receivable for $800 this time, also to Fourlane. Now, one thing that I always like doing too, what happens if I try to put it another line to Amy's bird sanctuary? Again, now why would I do this? I don't know. But people do that, do these kinds of things. And now you can see that it affected my account AR aging. It will allow me to put two separate AR accounts on the same transaction. Just two different lines with two different customers on them. Okay. Now, if I drill down into this detail, I see my negative 800 because I did a credit card credit, right? Which is the opposite of a check. So it's like almost like a deposit in there. You can see those transactions in here. Now, just to take it forward over to the other side over here on a bank deposit, I can do the same thing. I can come into a bank deposit. I can say I received this money from Fourlane, and I can do the account as accounts receivable, and I can do the amount as $150 and say save and close. And now there's $150 again. Okay. Now, the one that we see most often, now I'm showing you, I'm breaking QuickBooks. That's what I always call it. I like to break QuickBooks because when you break QuickBooks, then you have to figure out how to fix it, right? And that's part of becoming the expert in QuickBooks Online is knowing how to fix things when you stumble upon them. Of course, we can go in and delete transactions, but that's not, delete isn't always okay. Obviously, we'd be doing some training with whoever was posting these kind of transactions like this. But the one you will see most often probably is journal entries. So a lot of times when people are writing off bad debt, they will do journal entries. So I can come in here and I can put to accounts receivable, $150, Fourlane. And then my offset can be sales of product income, right? Credit. So this is basically doing exactly what an invoice would do, just not running it through a product. I'm still hitting the same accounts behind the scenes. Now, do I ever suggest doing this? No. Journal entries should be meant for cleaning up things only, not for running day-to-day activities, right? So I can save this. I can reverse this, right? It reverses on 6/1. Save the reversal. It allows all those things to happen. So also on a journal entry, you can see accounts receivable flow. Okay. Now the initial journal entry showing up here, not the reversal, because we're looking at as of May 25th, and that reversal we dated on June 1st. So those are all the other kinds of transactions that you can see pop up in a file around accounts receivable. Now, luckily, they do show you, what type of transaction it is that's hitting these reports, right? And that way you can, again, figure out who needs training. So if I move this date forward to the end of the 6/30, so we captured that reversal, then we're going to see that negative 115 here as well. Okay. So now what? How do we fix it? Now this part is the part that gets a little bit quirky. There are a couple of different things that we have learned over the years around this part. Little bit quirky. So I'm going to do the Amy's Bird Sanctuary one that we had first before I go in and start to fix this Fourlane one. So if I had that $100, right, and let me drill down into this, and we saw that was that credit card credit, negative $100. Now let's say I was like, oh gosh, that was a mistake, and I need to post the offset in a journal entry. So I can come in here and post it as of 5/31. I want to hit accounts receivable for $100 to Amy's Bird Sanctuary. And I need to know what the offset is, probably some kind of sales income, or I would hit whatever the offset was from that other transaction. So now when I look in on my summary report here, I have the plus 100, I have the minus 100, and I want to apply them to each other, right? Because I need to get that cleared out. And I just need to leave the 239 that they actually owe me without this other mess that I've created. So one way to do that is you can come in to the invoice itself that is open, and you can go to receive payment. When I go to receive payment screen in here, notice it picks up the $139 here because it's auto applying this $100 credit for me. Okay. Now this is where we need to pay attention. So because that invoice has a due date that's prior to my journal entry date, it shows up on the top of my list here. Okay. If it was in a different order, the different order would matter. But because of the due date being before the journal entry date, it ranks them based on due date. Right now, journal entry doesn't have a due date field on it, so it just takes transaction date as due date at that point. So why that matters, it doesn't matter if I go from the invoice to receive payment, but why that would matter is, let me flip it around and go into my invoice real quick again and change the due date to be 0601 and say save. Okay. Now, when I come in here and instead of going to the transaction and receiving payment, I want to go into new and receive payments. Choose Amy's Bird Sanctuary and notice, right, that it picks up and auto applies whatever's due date is first. So now that $100 is applied to here. Okay, because that's what I want it to be applied to. Now, one of the things that we realized, let me go back again and change this to be, I'm going to get it before save. Of course, you should not be bouncing these things around, but we're just showing how to break it. One of the things is if you do have it before and you come and you hit that receive payment, right, and it tries to apply that $100 to the $239, if I start unchecking boxes and saying, like, I don't want to apply it to this invoice, I do want to apply it to this journal entry, I don't know if you saw that, but it went from being $100 here and $100 down here to now showing $100 here and $0 down below. Okay, so you would think by checking, right, like check, uncheck, that $100 would sit there, but it doesn't. So you have to be aware of when you're clicking. Okay. The other thing that we have learned, so let me back out of this real quick. The other thing that we have learned is when we go in and receive a payment, instead of doing the checking and unchecking, okay, what you should be, well, let me break it one more time for you. So if I uncheck here, right, it says amount received 0, even though it has that 100 down here. I recheck, so it shows that 100 down here. Notice how it says 100 here, 100 here, which should be a wash because it's a plus 100 minus 100. But up top here, it's showing amount received is 100. And if I change this to saying amount received 0, because it should be a wash, see how it now takes this amount out. So it's just this weird quirkiness that happens because of the check boxes. Right? So if you come in to receive payments and you're trying to change where the payment default receives to, don't use the check boxes. What you want to do instead, go back and reset, new, receive payments, and I want to choose for Amy's Bird Sanctuary. What I want to do instead, right, is I want to change the amount. Changes to 0, changes to 100, and it fixes itself. It does all of the things correctly. Okay. 3 minutes left. The other thing is, because of the ones that we did on Fourlane, right, how Fourlane had all of the checks and deposits, but it didn't have an invoice on it, you have to come in, the Fourlane customer, you have to come in and receive payment from here because I don't have an invoice to start receiving payment from. Right? So if I say in here, we have a $300 credit card credit, and I'm going to apply 0 to this, 150 to this, and 150 down below. Of course, now it's not going to work in my sample file. Let's do that one more time. Oh, the alternative to what we learned this morning is, first of all, the date order matters. So if I wanted to apply the 150 to this, I have to reorder the date. So I can move this check date to be 5/26 because the auto apply will work. So if I didn't want it to apply to this, so X without saving, and I said I'm okay to move this date ahead a day. Then when I come into my receive payment and I choose Fourlane, right, it's in the proper order. So I can uncheck this 150, change this amount to 150, and it will, hopefully this time, nope, of course it's not going to give me an error this time. All right, well, I'll have to figure out why. Oh, did I check it? Maybe that was because I was checking it. 150 and 150, whoops, 150, and say save and close. There we go. I don't know what I did, but if you can manually override as long as it's in the right order. Okay. All right, we're running up against time. Knowing the quirks of QuickBooks Online, right? Knowing the quirks of any software product that you're working with is super important. Knowing how to get it fixed is super important. So takeaways from today: don't use those check mark boxes, and definitely look at training people on how to enter the transactions that they're trying to get to in a way besides using some of those other transaction types. Coming up, so we had a request last week to how to handle PayPal fees on an invoice. So we're going to talk about that next week. Entering beginning balances, all things estimates, and then prepaid expenses. If you guys have other things that you would like tackled that are affecting your daily life, definitely let me know in chat. Otherwise, I hope everybody has a wonderful day. Thanks, guys.